let's get back to what I normally do. We'll start with the dollar index because I just want to get my teeth into some dollar pairs. You know, the dollar and the US economy is very much a focus at the moment, isn't it? With Federal Reserve being quite aggressive about interest rate rises, the economy doing quite well as far as jobs are concerned, of course, but that is not good news for inflation. Inflation is pushing higher, and that jobs report is only going to increase worries about aggressive Fed interest rate hikes going forward. And we've got the CPI number on Wednesday, so that will be quite crucial. This is what we're waiting for this week. Right, so the dollar is in a bull trend. The dollar very nicely held this trend line here that I have going back to the end of March. Didn't quite dip down to what would have been a lovely support level around 104. I'm going to call that 104.70, 104.50. That would have been a dream to buy in there, but we didn't manage to get to do that. We've got trend lines, we've got Fibonacci levels down there. But it was this trend line, the slightly shorter term trend line, and the 50-day moving average that caught it. Now, if you're a subscriber, I did send you that chart during the week, so you would have been aware that that was the big support level. And if you did buy into the dollar, you did quite well, especially if you ran it over the US non-farm payroll number, which of course I don't advise doing. It's a gamble, but it would have paid off. So I'm assuming the dollar will maintain that bull trend. So we'll look at some dollar pairs and see how that translates. Well, the euro versus the US dollar is in a very irritating sideways trend, not something I like. Again, let's just expand this out on the daily chart. We can put some trend lines on here. If you fancy a scalp, then, you know, get in, get out, get in, get out. We've got some trend line there. I would say a trend line here. Sooner rather than later, this has to break, of course. Now, I think it'll probably break to the downside, as I say, because I think the US dollar is going to increase in value. And I think that, well, we are so clearly in a bear trend for this market, so clearly that you've got to bet that a move to the downside is the most likely scenario. This I don't see as a bottoming pattern at all. I see it as a consolidation. So we've got good fib support. Now, if you've been trading this with my report, you'd have done all right, because I've actually identified this sideways channel quite early on. And really, it was just a case of trading the fib levels. So that sort of 101.50, 101.30 level, if you were wondering where I got that from, that's just from that fib level. We overran it initially, but it's been holding quite well. And now we've even got a trend line. And of course, I had that level around 102.70, 102, what did I have? 102.50, 102.70, something like that. That's also been working well. There's nothing I can say. We've got to wait for the breakout. Aussie dollar, of course, in a bear trend with a strong dollar. More recently, there's the picture. That's it. That's the one with my fib levels on. Now, I had a really nice resistance level here around the 70.5 area. That worked beautifully. I hope you managed to get the short off there last week. That worked really nicely. The support level here hasn't worked. We broke below it, although we didn't close below it yet on a daily basis. So we'll see if that holds on a closing basis, as I say. But, well, I thought this was a bear flag, and it could still be. It's a slightly awkwardly shaped one, but I still would favour a move to the downside eventually. It's just really tricky. You know, up one day, down the next. Yes, we did crawl higher, but I really don't. These patterns, well, you know, these channels where we go up one day and down the next, they really irritate me. Anyway, look, we're trading below the 50-day moving average. We've broken below that trend line. We are in a bear trend. That resistance level up there really did hold quite nicely. If we retest it around the 70.5 area, should be a strong resistance level again. We've even got the 100-day moving average drifting down towards there. So if we were to crawl up, say we had a weak CPI number during the week, for example, and the Aussie did shoot up towards that area, I would imagine that will again be a strong resistance level. I do have two resistance levels on today's spreadsheet of trade ideas, as you've probably already seen. Right. New Zealand dollar, this resistance level didn't hold initially, around the 62.90, 63.10, but it did hold eventually. So I think, again, pressure to the downside, looking for a stronger dollar. 50-day moving average now, the market didn't really manage to get above there, not for long. The bull flag, the bear flag seems to be playing out. Fooled me a little bit with a break here, but we didn't close below the lower trend line. Certainly on Friday, we definitely did. Now the question is, do we break below this trend line here, which is around 62.30? This trend line going back to, where is that? April. Yeah, I just think it's quite negative on the downside. Last week's weekly candle actually slightly negative, not quite a bearish engulfing candle, but we did get a new high and a lower close. So of course that's not particularly positive on the weekly chart for the New Zealand dollar versus the US dollar. Now we had a lovely trade in the US dollar versus the Canadian dollar, buying down here around 127.95, 127.75. That was a beauty, nice recovery off there. How long did you run that long for? Well, hopefully you made at least 100 pips out of that trade. It will be a good resistance level, but we're nowhere near it, and we really took off The dollar took off against the Canadian on that non-farm payroll number on Friday. Now, I'm lost. I don't know what to make of this chart. Basically, we are in one huge sideways channel. So again, we're kind of dipping to the halfway mark and then recovering at the moment. So the question is, do we retest the upper trend line around sort of 131.00? Of course, if we break higher, we could get up to 132.00. Yeah, I really don't know what to do with it, if I'm honest. You can see where we are. We're in a channel. We bounced off the 61.8% fib. That was my support level. It coincided with the 100-day moving average. So it's a pretty obvious big support level, and it certainly worked. Now the question is, yeah, what do we do up around sort of 130.5, 131.00? Do we reverse from there? I guess it's all down to the CPI number on Wednesday. Cable, the pound versus the dollar, also clearly in a very much in a bear trend, of course. Stronger dollar. There we go. Look at that. That goes back to anyway, whatever. Right, now let me just zoom into what's important now. A bear flag again. Bear flags, we're either seeing sideways trending markets or we're seeing bear flags in the dollar pairs. So, whoops, it does look like we've broken down through the bear flag. As you can see, the channel was very tight, very clean actually. We touched the upper and the lower trend lines quite a few times, broke lower Friday, of course, with the stronger dollar on the US non-farm payroll number. But now, we got to the trend line that I've had here for a little while, goes back to April. We've bounced off it. It's around the 120 area, 120.00 area. So it held, but we've got resistance now, sort of 121. Well, the trend line is at 121.90. The 50-day moving average is around 121.65. So that upper 121 area definitely is a resistance level. And if you believe that the bear flag has been completed and we should eventually trade down, which I think is the case, then that would be a good resistance level if we get anywhere near it. Or sell a break below sort of 1.190, 119.90 would be the break point to the downside. Yeah, 119.90, and then eventually I think we'll retest this low down here. What is that area? 117.5. So look, clearly a bear trend for cable.